Business law, foundation of modern commercial activities. Introduction. Business law encompasses the legal framework governing commercial transactions, business formation, and operational compliance. It regulates how businesses are established, how they operate, how they interact with stakeholders, and how they are dissolved. Without legal structure, commercial activities would lack certainty, fairness, and accountability. Business law ensures predictability, protects rights and obligations, and provides dispute resolution mechanisms. It covers contracts, employment, intellectual property, taxation, competition, financial regulation, and alternative dispute resolution. In this course, we will explore 8 essential modules that form the backbone of modern business regulation. Chapter 1. Business formation and structure. The formation and selection of a business structure is a fundamental decision that carries long-term legal, financial, and managerial implications. Choosing a business entity is not merely an administrative matter. It affects how liability is allocated, how personal assets are protected, how taxes are imposed, and how the business will sustain itself over time. Business law literature emphasizes that selecting a business structure should consider several important factors, including the level of business risk, funding needs, management control patterns, the complexity of applicable regulations. A careful assessment of these factors helps entrepreneurs choose the most appropriate legal structure for their business objectives. Limited Liability Company, or LLC. One of the most commonly used business entities is the Limited Liability Company, or LLC. An LLC combines characteristics of both a partnership and a corporation, particularly in terms of management flexibility and limited liability protection. In an LLC, the owners, known as members, are generally not personally liable for the company's debts and obligations. This means that their personal assets are protected from claims by creditors. From a taxation perspective, LLCs typically apply a pass-through taxation system. Under this system, business profits are taxed at the individual level of the members, rather than at the entity level. Because of its flexibility and legal protection, the LLC structure is especially popular among small and medium-sized enterprises, including startups that require operational flexibility while still seeking legal protection. Corporation. A corporation is a legal entity that is separate and distinct from its owners, who are called shareholders. As an independent legal person, a corporation has its own rights and obligations. It can own property, enter into contracts, and sue or be sued in its own name. The corporate structure generally consists of shareholders, a board of directors, executive management. One major advantage of a corporation is its ability to raise large amounts of capital through the issuance of shares. Additionally, the corporation's existence is not dependent on any particular owner, ensuring business continuity. However, corporations often face more complex regulatory requirements. In the case of a C corporation, there is also the possibility of double taxation. This occurs when profits are taxed at the corporate level and then taxed again when distributed to shareholders as dividends. Partnership. A partnership is a business structure formed by 2 or more persons who agree to conduct business together. In a general partnership, all partners have unlimited liability for the business's obligations. This means they are personally responsible for the company's debts. In contrast, a limited partnership or limited liability partnership provides limited liability protection for certain partners. Partnerships are relatively easy to establish and offer flexibility in profit sharing and management arrangements. This structure is commonly used in professional practices, such as law firms and accounting firms. Nevertheless, potential conflicts between partners and personal liability risks must be carefully considered before choosing this structure. The incorporation process. For corporations, the establishment process is known as incorporation. This process involves submitting formal documents to the relevant government authority. One key document is the Articles of Incorporation, which includes the company's name, business purpose, share structure, registered address. Once these documents are approved, the entity officially becomes a separate legal person, distinct from its founders. The next steps typically include appointing directors, drafting internal regulations, and issuing initial shares. These steps mark the formal birth of the corporation as an independent legal entity. Establishing governing documents. Beyond formal registration, Forming a business also requires the preparation of governing documents. These documents regulate the internal operations of the entity. For a corporation, the Articles of Incorporation serve as the foundational document that grants external legal recognition. The bylaws regulate internal matters such as meeting procedures, directors' authority, and shareholders' rights. For an LLC, the operating agreement is the key document. It governs the rights and obligations of members, profit distribution, and decision-making procedures. For a partnership, the partnership agreement outlines capital contributions, profit sharing, liability allocation, and dispute resolution mechanisms. Clear and well-drafted governing documents are essential. They help prevent internal conflicts and reduce legal risks in the future.
Okay, see you on the top.
Yes.